Hello there again, and welcome to Market Insights here on Suk News Television, Lagos. Today, October 18, 2024. TGIF, it's a fantastically beautiful Friday morning. I'm hoping that it's colorful where you are at right this minute, whether you are at work, whether you are on the go, or perhaps at home, or someplace else that's fancy. Where you are already in full swing for the weekend. I can tell you this for free, I am gearing up for the weekend at my end. I'm David Chiedu, by the way, and once again, welcome to Market Insights. It's where we talk about everything that has to do with the market and how we interact with it therein, including what it means for our pockets or our bank accounts, the granularity of it all, the naira and kobo of it all. That's exactly what you'd find here on Market Insight. Today on the program, we're talking about the impact of our lingering FX crisis on investors' confidence and the economy generally. And we will get into the conversation very, very shortly, but not before we take a look at the trading summary so far for the week that ended yesterday, October 17, yesterday, Thursday, October 17, 2024. So at the end of yesterday's trading session, on the NGX, talking about the Nigerian Exchange Group, a total of 229,308,707 shares in 7,318 deals, corresponding to a market value of 6,408,745,640 naira 98 kobo were traded. Compared with the previous NGX trading day, that was Wednesday, October 16, Thursday's data showed 7% decline in volume, a 29% decline in turnover, and a 6% decline in deals. Now, the current market's capitalization of the Nigerian Stock Exchange is 59.4 trillion naira. In the aggregate, 120 NGX listed equities participated in trading, ending with 29 gainers and 16 losers. Amongst the gainers were Golden Guinea Breweries, led that chart actually with 10% share price appreciation, closing at 3 naira 74 kobo per share, followed by Deep Capital Management and Trust going up 9.85%, and Transcorp Power going up 9.68%, as well as Jais Bank going up 8.64%. On the other hand, the losing side, that is, Airedale Holdings, came out last with an end-of-day price depreciation of 10% at 694 naira 80 kobo per share, followed by Regency Alliance Insurance going down a negative 8.82%, Dar Communications going down 6.78%, and UAC of Nigeria going down 6.7%. Sterling Bank recorded the highest volume of 42.8 million traded shares, followed by Zenith Bank PLC recording 20.1 million. Guarantee Trust Bank, or rather Guarantee Trust Holdings instead, going with 19.6 million shares overall, and Access Holdings with 16.3 million shares. That's what it looked like on the floor of the NGX during the course of the week and the trading week recorded yesterday. That's pretty much the short and sweet of it. We get straight into the conversation, the heart of it therein, talking about the country's FX crisis and its impact on investors' confidence and the wider economy. Shortly after the break, stay with us. Welcome back to Market Insights, and we are going straight to it, talking about the FX crisis and what it's doing for our foreign investors as well as the economy. Now, lately, Nigeria has struggled with FDIs due to lingering foreign exchange liquidity crisis. Data obtained from the National Bureau of Statistics, NBS, showed that foreign direct investment decreased by 75% to a paltry $29.8 million in the second quarter from $119 million recorded in the first quarter. Now, foreign portfolio investment also, which contributed the most to the total capital information or capital importation, beg your pardon, also fell by 32% quarter on quarter to $1.4 billion in the same period under review. Some experts have attributed the waning appetite of foreign investors in the country to the lingering crisis, rising inflation, as well as worsening insecurity. And to discuss what this means for trade and what it does also mean for the economy at large, we're being joined by Dr. David Oyetunji. He is the proprietor and governing school board chairman to Unity International Schools and UIS ICT Power Hub. He's also the former director, Finance and Accounts, National Automotive Design and Development Council, NADDC. Good morning, Dr. Oyetunji. Thank you for joining us.
Thank you for having me. Thanks so much.
On this note, and get your thoughts very quickly. Now, the Naira has experienced persistent volatility all through the year, losing well over half its value. In fact, 70% of its value so far. It opened the year at about 907 Naira to the dollar, as it were. But now it's crossed the historic high or historic, low. It's sunk that deep to about 1,600 plus. And this is looking worrisome for most stakeholders and players in the sector, as you will. And for most Nigerians too, I want to know, first off, before we go any further, if this trend, comes across to you, Doctor, as worrying. Does it worry you? Did you get my question, Doctor?
Please, can you repeat again?
Will do, gladly. So I was asking what your thoughts are to get, a sense of, what you think about the current trend. So, we've seen the Naira lose a chunk of its value, well over half of it, and talking about specifically 70% of its value, having experienced persistent volatility throughout the course of the year, opening at 907 Naira to the dollar. And then, of course, getting to a historic low of over 1,600 Naira, see where many think of this as extremely worrying. Do you share that sentiment, Doctor?
Actually, just you rightly mentioned, it is increasing. Hello? So it is increasing. The Naira is depreciating day by day. This is because of the government agenda from its inception, where it was announced that subsidy shall be removed. The removal of subsidy has affected all phases of economy because every aspect of economy is connected to transportation. So this has resulted to high transportation costs and currently is affecting virtually everything. Coming to agricultural products, so taking the products from the farm to the market, very expensive, and this has been shifted onto the final consumers. If you talk of aviation, the same. If you talk of any area, so this is what one would have expected. The government, while coming in, should have, first of all, sat down, review, and check the impact it will have on people, both immediate and remote impact. And this will have been done, and they will have known the implications, who and who will be affected. Basically, it has affected the common man. Common man is finding it difficult to meet up. And of course, the Nigerian economy that is foreign dependent, it has seriously affected it. So the removal of subsidy, it has made everything so difficult. and the naira that is being unified, the exchange rate that is being unified, all this compounded the problem. And right now, we can see how the inflation is going. An economy that is foreign dependent, an economy that is not that depends solely or factually on almost everything being imported will be affected by the exchange rate. And this has caused the inflation. Right now, we have inflation of about 25%. So it is very, very high and it's increasing on daily basis. What people meet today is not what they get tomorrow. So it is indeed a problem.
All right. Now, Doctor, let's also get your thoughts on more of it here. This lingering issue, this FX liquidity crisis, has seen a lot of investors scamper off. You know, a lot of them are scared. They're not looking to bring their businesses here because every investor, regardless of what cadre, would want to see some sort of return, as it were. But you know, they're not doing that. It feels to a large extent, like pouring water in a basket, like they're throwing money in a hole. We're not getting the requisite FDIs. What are your thoughts, Doctor, on the implications of this for the wider economy?
Currently, many foreign investors are not interested in investing in the Nigeria economy because there is policy somersault, there is corruption, there is institutional, inefficiency. All these are problems that are really affecting people from bringing their investment into the country. What of insecurity? That is really a problem, and up to now it has not been tackled. Government seems to be trying all they could, but they are yet to get it right. And all this information filter to people here and there. So who would like to bring his money into a country that is not stable politically, economically, and even security-wise? So these are the factors people check when they are coming into a country to invest. So, and then people check some other things, like if you check from Obasanjo, you will see that the economic growth was 6.9. During Jonathan, Yaradua, it was 6%. During Goodluck Jonathan, it rose to 6.3%. If you check during Muhammadu Buhari, it was 1.1. This current government met it from 2.5 to 3%. And people keep seeing a downward trend in the economic growth. Then they look at another index, which is inflation. Inflation keeps rising. If you look at during Obasanjo, we had single digit, which was 5.4%. During Yaradua, it was 10.7%, although there was a world financial problem. And during Jonathan, it was between 8 and 12%. During Muhammadu Buhari, it was 21.9%, and currently is 25%. When people check your economic stability based on the economic growth, they look at the inflation. This is a discouraging factor. And this is an area that every government desires to tackle. So up to now, they are trying, although this current government, we can say, well, it is too early to say what will happen. But at any rate, the short-term effect is not really good because the inflation is really going higher and higher. All these are factors that will discourage foreign direct investment. If people would like to attract foreign investors, we must check in this area. There must be economic stability, there must be political stability, there must be low inflation rate, then and some other factors. So these are things that government will need to really work on very sincerely and seriously if foreign investors will be attracted.
All right, Doc. Let's talk about our macroeconomic challenges, which we've just highlighted a bit of it. That seems to be the major crux of our matter. But by the way, our inflation rate is at 32.70%. But away from that, now this lingering macroeconomic challenges, have led to the shift in investor confidence. At this point, we don't particularly worry about whether or not we'll find our way out of it. What the concern right now is whether or not, we're not going to see an exacerbation of the already worse situation by some of the, implementation of the policies, both on the monetary side and the fiscal side. What are your thoughts? And all of
Well, the one thing about this country is that we should be able to study based on historical perspective to see what are the approaches, the economic policies that had been used and they are working. And then we look for how we can really, improve upon that. Like I mentioned, this government started from the intention to restructure the economy, even though the approach could have been gradual and could have been done in a way that the effect will not be as high as it is on people. If you look at during the Obasanjo era, you look at what Soludo did, you will see that the banking sector was strengthened due to recapitalization. Those who could not recapitalize, they ended up merging, and we had stronger economy. And you could see the work on foreign debt, because during Obasanjo, 18 billion US dollars were gotten as debt relief. So, and foreign reserves increased. So we will be expecting things like this to happen. But unfortunately, what happened with the subsequent regimes, things were getting worse and worse and worse. Probably this is as a result of who are we putting in positions. Do they actually have what it takes to handle specific assignments that are being given to them? So you can see Okojo-Iweala, it was during Obasanjo and during Jonathan. And of course, you could see the performance. Currently, we will have expected things like this to replicate itself. And of course, from the feelers that we are getting from the social media, that Mr. President is trying to see how he can reshuffle his cabinet, that some are not performing. Now, during the last Nigeria Economic Society, it was strayed about who are we putting in positions to really man specific areas. Some institutions are considered as economic institutions, something like CBN. What will you stop anyone to say that you will not put an economist in that place? Because take for instance, it is not a slight on anybody. If you are talking, if you check it with what happened with the last regime, who was a banker, so if you check at it, you will look at, apart from when you are introducing fiscal policy, monetary policy, you need to check what will be the implications on people. It is not about introducing all these policies, it is about checking the implications of people. So government will have the intention, okay, we want to see that the economy improves, we want to see that the welfare of people will increase, all these things that you are talking about. When you are bringing out your policy, what will be the implications of these policies? And for these policies to really work effectively well, you need experts in those areas to handle some of these things, and if possible, an economic team that will be able to bring out the implications on some of these matters. The bottom line is that when we look at the trend, we will see that the quality of people that came in from regime to regime, we could see improvement. And we will be expecting that this current government will replicate the same and make sure that experts are brought in to be able to address some of these challenges. Most of these challenges, they all border on economic policies that we are introducing into the system. Some of these economic policies, they ought to have been checked. What will be the implication? Just like the subsidy that was removed. You remove the subsidy, you did not look at the implications. And these implications are now coming. Government are talking of, okay, let us do palliative, let us do this. Some of these palliatives, they go along with the old system. And we know that our economy, because of corruption, some of these things will not be effectively handled. So we need to study other economies.
Dr. Oyetunji, can you hear me? Dr.
Yes,
Oyetunji, can you hear me?
Yeah.
I wanted to follow up on, the part or the role that the central bank has played so far, in efforts to shore up the naira, as he were, and also to curb inflation, which is, astronomically high these days. A couple of weeks ago, the MPC raised the benchmark interest rate again by another 50 basis points. This came, against the expectations of many, as he were, but as yet, some experts seem to think that it hasn't particularly yielded much fruit, while some think that it's, a temporary discomfort for the greater good. In your view, do you think it was a smart decision, or do you think it was a decision made a little too hasty and perhaps out of order? What are your thoughts, Doctor?
Well, the point is that when you are fixing the inflation rate, what are the basis for fixing it? Because the economy will play its own game. So the issue is that some of these things that they fix, when we align it with the reality, do they actually reflect the reality? The answer is no. The answer is no. Some of these figures are being introduced to give impression that, things are improving, things are moving well, but go to the market, check the market. Is it a reflection of what is being reported? So it means that it will help us if we can be sincere with what we are doing. And that will equally help Mr. President if the truth is being revealed to Mr. President and the economic team, so as to know what type of policies to introduce, or what kind of amendments to be made to ensure that things are working well. If you go to the market, you will see a mismatch. So the matching principle is not really being followed. So unfortunately, it's like those fixing the figure, they are doing their own to impress the government, whereas the reality in the market is totally different. And the people are crying, and that's the main thing.
All right. Now, still talking about the CBN, or still staying with the CBN, let's talk about this self-same hawkish stance or hawkish policy by the CBN. Now, we've seen that particular action, leading to more interest by investors, or on the part of investors, with regards to, our treasury bills. It's made the fixed income market more attractive or more lucrative, so to speak. So it's like they're going after hot money as opposed to foreign direct investment. That's led to a boost in the former as opposed to the latter. Is this a good thing for us? Doctor, can you hear me?
Your last question, please. Yes, your last question.
Was that the CBN's hawkish stance? We've just talked about the fact that a couple of weeks ago they increased the benchmark interest rate. So I'm asking your thoughts with regards to some of the knock-on effects of that particular action. So as far as the fixed income market is concerned, or if you like, our treasury bills are concerned, it's gotten some investors more interested in that as opposed to foreign direct investment. So it's the case of one being interested in hot money as opposed to the latter. And it's, it's helped us significantly boost yields, as you were. Is this a good thing for us? Is this something to be, excited about? Or is it just another ordinary reaction to what has already been done? Or, another ordinary reflection of what has already been done? What are your thoughts?
Well, let's look at the issue of a treasury bill. When you're talking about treasury bill, it's a way of mopping up the cash, the liquidity from circulation. And of course, people will like to buy treasury bills when probably there are no investments into which you can put your money. Because if you check the return on treasury bill, it is so little. That will only work for those who do not have business ideas or who do not have the intention to invest into into some to go into some investments. So the treasury bill that we are talking about, if you look at during the regime of Buhari, during Jonathan, treasury bill was like 10%. And a lot of people who I could remember when I was in with the National Automotive Design Development Council. Some people got our loan. They got the loan at 7%, at 5%. Do you realize that some of them sold off some of these products and invested in treasury bill, so that they already see that the difference between 5% and 10%, they have already made 5% gain. Then during Muhammadu Buhari, what they did was to to reduce it drastically. That discouraged people from putting their money into the treasury bill, especially those who have investment, consciousness. When you invest into the economy, you boost the economy. You increase the economic growth. You generate employment, and the totality of that will help the economy to grow. So treasury bill, as you are talking about, is something that needs to be discouraged. Yes, you can do it if you feel that there's too much money in the circulation, but it's something that you should discourage. But rather, what you should do is encourage investment. And how do you encourage investment? By reducing the interest rate to a level, to a single digit, if possible. Of course, the banks cannot do that, because they will check at what rate did they get the money. They cannot give the money out as loans at a lower rate when they got it at a higher rate. They are out there to make profit. So for me, most of the policies that we bring out, they brought them out with the aim to address the economic challenges. But you discover that at the end of the day, we don't really get to the solution that we desire.
Now, Doctor, to continue with the conversation and our train of thought before the break, there's been some, optimism amongst the class of experts or some stakeholders, as the case may be, who seem to believe that the weak naira poses some opportunity or has embedded in it some opportunity still as far as competitive exports is concerned. In fact, the CBN governor himself seems to believe that it will enhance export competition or export competitiveness and giving local importers an edge in the market. What do you reckon?
Well, that is a valid thought, but you have to check the reality. Like, if your economy is an export dependent, it will definitely help you. It means you will be able to sell most of your products, and that will increase your foreign earnings, and your foreign reserve too will be increased. So all this, it is for economy that is export dependent. But unfortunately, our economy is import dependent. And we rely mostly on oil, which is the price of which is externally determined. If you check part of what affected Jonathan towards the tail end, it was the crash of oil prices that affected Jonathan during that period. So if you look at the issue of war that is happening in the Middle East, you will say it's an opportunity for it, but unfortunately, it is externally determined. What do we have to sell? That is the question. We're supposed to embark on industrial revolution and development. All our industries ought to be, refarmed. We're supposed to create industrial growth. It is when we do all this, then things can work. If you look at Germany, they rely mostly on export, and they make sure that they meet standard. In our own case, what exactly do we depend upon? Under normal circumstances, you know that your economy is weak, you know that you don't have money, but you are carrying so many things simultaneously. You want to do them. Why can't you do specialization? You can say that, okay, we want to rely on development of product A and B as export in addition to that of oil. Okay, we have a lot of mineral resources. Can we concentrate on these mineral resources in the next 1 or 2 years? Whether it's gold you want to talk about, we have it in abundance around Zamfara and some other places. The problem with us is that we are like jack of all trades, master of none. So it is a valid point, and that point can only work if you have what to export. So what exactly are we exporting? Majorly, our export is oil. And some of the things that people are consuming, we again import them. Whatever you get from that foreign exchange, you will still utilize it to pay for what you are importing. So it is something that it has to be with bringing together experts that will really look at it roundly and be able to advise. Some of the things we say, they are just the position of the theories, the principles, but what of the reality? Is in line with the reality? The answer is no. And that is why we continue to have problems.
Doctor, speaking about realities and speaking about theories and practicability of certain policies, the World Bank, and even the IMF too, have come under some harsh criticism lately by some stakeholders, rolling out their theories, one theory after the other, to govern, so to use that word, the economics of Nigeria as it's constituted. As a matter of fact, lately they've talked about, what we're going through now, what policies are in place right now, maintaining said reforms for a 10 to 15 year period. And some experts are saying, listen, um, you cannot measure us with the same, tape rule or tape measuring rule, as you will, yardstick, as some other countries because, the fingers are not equal. And then your reforms over the years or your suggestions for reforms over the years haven't particularly positioned Nigeria as an economic power on the global stage as yet. So why should we still believe in your your gospel or believe in your theories, as the case may be? Can you speak to that, Doctor, very, very quickly in a few words?
Well, you see, even if you get a policy from IMF and World Bank, it is expected that you come back home and domesticate it. It may not work exactly the way they have said. So you have to customize it, you have to domesticate it, you have to look at your own environment and then adapt whatever policy that you are talking about. Sometimes one area you come up with very good policy. In another area, you use that policy to scatter the one that has been well thought of. Take, for instance, when India, they wanted to develop their automotive industry. What they did is that from the top government to the lowest person, you must buy the locally produced vehicles, which is Maruti. In this country, we kept on bringing the manufacturers, the assemblers, and it's the same thing in some other sectors. At the same time, we will go and import. Then how do you help those who are in your country to grow? Which economy are you helping? You will see it is counterproductive. And that is the situation. Now, this government, they started with by saying things are bad, then let us stabilize the economy using this policy. The fear of many is that, will they be consistent? Will it be that when the new government comes in, they will follow up? Is something that nobody is sure of. And then, even as they are doing it, how are we sure that we will not suffer today and tomorrow we suffer more? Because that has been the experience. What everybody wants is that whatever policy you are bringing, let's see that that policy does not exclude anybody, is from the top to the down. Take, for instance, now, we are all experiencing hardship. Check the National Assembly. What is the value of the vehicles being used? From where did these vehicles were imported? What happened to our local industries? If we had patronized them, what do you think will happen to the job creation they are talking about? You are talking of job creation, but you are not supporting those who are operating within your economy. Then you are talking of forex becoming volatile, and yet you keep on importing rather than using the money that you have to develop your local industries, and then you reduce your import, and this will have helped the economy. So, by and large, until we become conscious of the fact that the new policy that we want to introduce, how is it going to affect the ones that are already in existence?
Doctor, thank you very much. And it's been pretty interesting talking about your thoughts, especially the last two remarks that you made, which seems very telling as far as what we're going through right now is concerned. But we do appreciate your time. Many thanks, Dr. David Oyetunji, for joining us on the program this morning. Thank you indeed very much for making our time to speak with us. Dr. Oyetunji is a seasoned economist, a fellow certified chartered accountant and auditor. He is the proprietor, governing school board chairman to Unity International School and USCICT Power Hub. He's also a former director, finance and accounting, beg your pardon, National Automotive Design and Development Council, NADDC. He's joined us this morning to talk about the issue on the table. As I mentioned, he did make a very salient point in his last couple remarks, where he spoke quite extensively about Nigeria undertaking a major industrial revolution where we become a master of something that, you know, we would be known for besides oil and gas as our main export, our mainstay, as he were. We do a lot, according to him, and that is quite also factual. We do a lot. We export a number of things. In fact, exports by category, besides the mainstay, which is oil and gas, is rubbers, coffee, plastics, miscellaneous and other edibles, as he were. But still, we seem to be making very little strides as opposed to giant strides. So if perhaps, maybe we became a master in a particular aspects besides our mainstay now, we may just see a shift, a paradigm shift, a huge one that is, may I add, in our revenue boost and overall outlook of our economy. So he does make a very salient point about us being a major, or rather undergoing a major industrial revolution, which will be key to our transformation, or key to the transformation of our economic lot. We need to sell more, we need to produce more, we need to export more. Therein lies our one of the solutions to our problems, being a specialized country, or if you like, a specialized nation, specializing in producing a particular commodity or a particular, good and service, whether it's, in the automotive sector, in the power sector, whatever it is. It does seem like him, like many other experts and economists and analysts, have more or less said the same thing. But whether or not we're going to see that happen in this administration, that is yet to be seen. But that's it on the program this morning. Many thanks for joining us, but we wouldn't leave until we let you in on what it looks like on the forex market today. So far, the Naira is exchanging to the dollar today at 1,667 Naira. But to give you a recap of what it's been like during the course of the week, we saw it sitting at 1,612 Naira on Monday and Tuesday, 1,657 Naira on Wednesday, 1,629 Naira, and yesterday, Thursday, 1,640 Naira. So that's pretty much what it's looked like so far during the course of the week on the official, or rather at the official market. Many thanks again for watching today's episode of Market Insight. Let's do this again Monday at the same time. Do have a fantastic weekend, but stay tuned. At the top of the hour is the news update, and after that, at 1 p.m., Suk Sports comes your way. I am David Chiedu. Good morning.